Happy Thursday. Welcome back. Final hour session just after 3 p.m. on Thursday, August 28th. Thumbnail today, September reality check. Uh, we are at all-time highs again. The market has broken 6,500. I'm looking at the SPX. We have been just slowly grinding higher all day. We had a low today around 64, 67. What's interesting is we looked at the plus minus for the morning and it started out around like 47, 48. And then all of a sudden it was down to 20, 21. We are now, well, I guess we started the day out around 64.86. It's about a $20 move. I'd say we're heading up towards that 50% ATR. These are some of my levels I have here in dynamic trend. So the 50% ATR looks like we're going to be testing it. We're right there. So that is at the 65.05. Do we have any type of stall there? Are we just going to still keep pushing? If I have any waterfall income students that are watching right now, I did send out the alert. We closed out our credit spread for the trade was filled for like $2.55, and I closed it out for $1.25. So we took about $1.30, $1.35 out of that trade, and now I have a free hedge that's running. So let me see. I think I've got to close all these out actually. SPX, let's see what these are doing. And I've got some rolls to take care of today as well. So SPX, August. So I'm going to close out the, let's see, tomorrow, if this is up to 35, there's some risk in the trade. I mean, up $100. I think it's going to take the profit. I've already taken profit on this account here. So this trade, SPX for filled, it was a 65.35 by 65.50 bear call spread. I filled it for $1.30 and it was taken in at 2.55. So we had $1.25 of profit. And then what's left on the trade is the August 29th, 25 by 30. This one's up about $55 bonus profit right now. This potentially can get up to, if we melt up to like 25 and 30 on the call side, this could potentially be like a $500 bonus trap. So where are we sitting on the options chain for tomorrow? 25 and 35. It's, it's trading in the 30 to 20 delta zone. So if we do hit that expected move to the upside, we could actually get a pretty nice profit out of that. So I think on my other trades, I'm going to take these off in full, and this will be a waterfall trade. Let me close this thing out for $1. So this is $1.60. I'm up 90 bucks. I'm just going to take the profit. And let me see what I can get on just the credit side. So 27.94. Let me just do the math here. So 27.94 minus 25.31. So 263 on the credit side, and I can close this thing down. 263. Fudge muffin. Well, I can take a profit on it. Let me see. I'm just going to take the break even on this trade and see if we get a free hedge. 215 debit. Maybe 220. All right, 220 got filled. I'm going to dissect this trade for all these accounts. So I'm taking the bear, the bear call spread, closing this thing for 220. What I do, 225 or 220? 220. Okay, so 220. Filled. And that way I have a free hedge that if we run up to 65.25, 65.30 tomorrow, that's a $500 bonus profit. So let's go SPX here. 1, 2, 3, 4. Waterfall S2. Taking the 35 by 50. Closing for 220. Okay. Excuse me. Same thing here. 1, 2, 3, 4. Group this. Waterfall S2. 35 by 50. Closing for 2.25. Is price just continuing to run up a little bit? You son of a bee. 335. Okay. So I'm just going to get rid of the risk side and just have a free hedge. So group. This is waterfall S2. Take this trade here. Close at 230. 230 got filled. 1, 2, 3, 4. So there's a little extra maintenance here. But I issued the alert earlier today, so you should be able to close out for over $1 on that credit spread. I'm getting out of these for a little bit less, but I'm still protecting the profit here. So 225, close out at 230. That still gives me a small winner on the credit spread with no risk on the trade, and then I've got a bonus trap on top of that. So let me get these out to manage. Group positions, waterfall S2. Close out the 35 by 50. Take the 225. Hopefully it will fill. 230 will fill. Okay. So I'm just going to keep going up the list here. I also have some rolls to take care of. I can do these all tomorrow as well for the rolls, but this one I want to take care of right away. Oops, so waterfall S2. Take care of the 35 by 50. I'm just repeating all this. Oh, now we're down to 220. That's good. Maybe a little bit more profit there. 225. Okay, so it's a little $40 profit. This one, August 35 and 225. And the reason I'm doing this is I think this market, I mean, tomorrow's the end of the month, and this market is just like, fudge it. Let's just freaking rip. And we keep melting up. We keep melting up. We've just inched higher, inched higher, inched higher. I would be super, super, super surprised to not see a correction coming into September. We have reality hitting the market in September. Non-farm payroll is probably going to be lackluster. CPI data is probably going to come in hotter. Core PCE tomorrow might also surprise to the upside. You know, we're dealing with a higher inflation environment. Yes, the administration wants to grow. The Fed is going to be cutting rates, but we are so overdue technically that I think we have a reality of the labor market is stalling. The labor market is weakening. People can get jobs, but nobody's hiring. The Fed's going to cut. And by the end of September, I think investors are going to realize that the Fed is cutting rates, but the long end of the curve is not changing. Japanese bond yields just went up to one of the highest levels in I don't know how long. They're at like 3.23. I mean, they've come from essentially 0 to 3%. I think our 10-year yield is going to be probably up closer to like 4.5, and we're not going to see the borrowing costs improve. So anyway, I just want to throw it out there. Like, I'd be super, super shocked to see a no pullback. I think we have to have a pullback towards at least a 50-day moving average. Now that we've been going higher, it's over 3% away. So it's like 3.25% away. Let me go into these positions, just keep chipping away. So 1, 2, 3, 4. Waterfall S2. 35 and 50. Close. Now we're getting, all right, I get a few more bucks here. 210. Must be we stalled at the top a little bit. 210 just got filled. That's now for 50, 55 bucks. November, that one doesn't have it. This one for August. Uh, 35 and 50. See if I can get 205 out of this one. 210. All right, so those are slightly better fills. And 1, 2, 3, 4. So now basically the reason I'm doing this is I have a free hedge that could pay me up to 500 bucks. If we rally tomorrow up to 65.20, 65.25, that pays me up to 500 bucks. So I want to get rid of the credit side, which is my risk of like $1,500. And it's actually my max risk was like 800 bucks, but I'm getting rid of that risk altogether. And now I just have a free hedge that pays me potentially 500 bucks. So there is my 35 by 50. 205, 210 gets me about 60 bucks on the trade. Filled at 210. Okay, a couple more to go here. So SPX November, call Condor, the 35 by 50, $2. So we faded back down to 65.03. That's interesting how this price has come down a little bit. So 205. Give me $60 out of this trade. You dirty dog. 210. All right, so $55 on the trade. This one is out November. This one is out November. This one, I just got the account open today. Okay, so that takes care of waterfall strategy 2 for the August 29th. What is left on this trade is a bull call spread that's up about $50. Now that's bonus profit. This potentially can pay me up to $500 tomorrow if we can melt up into the 65.20 to 65.30 zone. So there's a chance this one has it's zero risk, which is nice. So I have no risk on this trade, and this one could potentially get up to $500 for a profit trap. So that's the trade. Net, we'll see how it works out. Right. But if we keep going to like 65.20, 65.25, 65.30, today we melted up about 40 points from the low to high. We had a pullback today. Low was around 67. We are up 40 plus points. We're hitting this 65.05. I actually threw on a couple of late SPX orders that are still pending. The 65, that's out to, what's that one? Oh, that's my bull call spread. This one's 65.10 by 20, still offering 75 cents. I mean, we might be able to grab that by the end of the day. Maybe we still have another 40 minutes left. I mean, that's a little risky. It's like if I grab 78 cents, it's 80 cents. But if price just keeps jumping, jumping up to 10, I don't know. I actually probably the safe thing would be just take the profit today and not worry about it. That's only at 10, $2 credit. Probably won't get filled. But I don't know. I think I'll take a chance at it. We're at 65.04 right now. And I mean, tomorrow, it's like, you never know what's going to happen tomorrow. Tomorrow's core PCE. Does the market move on that? Does it not move on that? I don't know. Maybe the market doesn't care. We're going to the holiday weekend. It could be like low, slow, nothing really happens. Holiday on Monday, markets are closed. And then the market just does some funny stuff on Tuesday. Okay. So we'll see how it plays out. I put in a credit spread today for daily profit late. I went out to, what was this one here? I went to 65.45 by 55. I pulled in 95 cents in that trade. Right now, that same trade is trading for $1.90. I don't have another trade on yet, but let me see here. 45 and 55. If this trade can offer up $5, I will take that trade. Okay, so I'm going to put another pending order. So the 65.45 by 65.55 for $5, which means I'm risking 5 to make 5. If by Tuesday, morning or end of day, this thing is down below 65.45, then I can make a few bucks. Treasures, what's that question? What if we just leave it? What do we have? Well, the trade, if you just leave it, you're going to have some risk on the upside to the tune of about $800 if you don't touch it. So the way that trade would work would be this. If you don't do anything on this trade, here is the entire trade. Okay, so I've closed out my bear call side. The bull call side is running. If you don't do anything on the trade, this originally pulled in $1.60. Okay, so if you have price, if SPX is less than 6525, you're going to make $1.60. If price is greater than 6525 but less than 6535, you have up to $100 to $500 profit trap. So if it's 6526, that's a $100 bonus. 6527, that's a $200 bonus. The peak profit would be 6530 and after 30. So from 30 to 35, it's a $500 bonus. So this could be a $5 bonus, but we need price to be less than. We need price to be less than 6530. $5.35. Okay. So this is full profit. I know I'm freehanding this, but let me just reiterate this. So basically, if price is below 65.35, you're going to keep the $1.60 from the original trade. If price is between 65.25 and 65.35, that $10 zone offers up a $500 profit trap, but you want to see price stay below 65.35 to achieve that full profit. That would be $6.60. Okay. If price is greater than 65.40, you're taking on risk. That would be break even. And for every point above that, every point above 65.40, every point above 65.40 is going to be risk. So 41 is $100 risk, 42 is $200 risk, 43 for. So the worst case is you get this thing. The max risk is about $840 is the risk. Okay. So I mean, it's doable. Like tomorrow, PCE. I don't know what the expected move is, but we can look at it and see what the broker says. We're trading up to around 65.03. Could we move another 30 to 40 points tomorrow? Absolutely. That's certainly within the wheelhouse of price moving up that high for a day. Um, I've seen melt ups like that end of the month. I've seen some wild shenanigans. I mean, we had a crazy Jackson hole last week. We didn't really have a big mover. Like Nvidia didn't really do much overnight. The market just kind of completed their trend, which is just try to find new highs. Everything was green today from what I saw, and S&P just broke another all time high. Nasdaq is trying to get back to all time highs. Russell pulled back a little bit today. Dow is flat, but S&P is grinding higher. So anyway, does that make sense on the breakdown of the trade? So what I did is I took the risk out of the trade. So the 35 by 50, I closed that down for about $130 profit. And what I'm left with is this offers me a potential $5 profit trap. So right now it's paying me an extra 45 bucks. Now I can take that trade and walk away and say, okay, well, this paid me 45 plus the $1.30. So I can make, maybe 175. So I make 175 bucks. My original trade was offering me 160. So that's pulling in a little bit more bonus profit. But if we melt up higher, would I appreciate a, $5 bonus trap? Of course, I'd love to have a $500 bonus trap. So if tomorrow this market wants to go another 20, 30 points higher, this could offer me a $1 to $2 to $3, $4 profit. And I'll take whatever bonus trap I can get. Okay. So if you leave it alone, that's fine. I'm just trying to eliminate the risk. Because if we're beyond 65.40 tomorrow, I'm taking on $840 risk. And I'm trying to eliminate that and see where I can manage my profit. So at the very least, I'm going to manage profit for about $1.30. And on the best case scenario, I'll have the $1.30 plus the additional $5. I can make $630 on the trade, which I'd be okay with that. Okay. All right. So that trade is fully managed. I do want to go back into some of my DTEs. So I have QQQ. I have a collar trade on here that I'd like to roll. It expires tomorrow. This collar trade, I think this is the only one that I have. So it's a 536 by 530. This is, I think it's this account. I own shares at 520, and I've got a break even of 520.70 with a covered call at 536. I'm just going to roll this. Okay, so how far could we fall down the Qs to get to 536? If we go Qs at 536, that would give this market, we could pull back around 7%. So, I mean, I think I could just sell another call and probably pull in some premium here. So let me go out another week. If I go out another week, here's the bad side. Look at the strikes. So I've got the August 29th, that's up to 536. I don't want to lower my strike. So I'm gonna play around with the expiration here. I can go out 1 week. Actually, that's to Tuesday. Never mind. Let me go out 1 week. That'd be September 5th. So September 5th, can I keep it at 536? I can. I can get an extra 56 cents out of that for another week. If I roll it out to the monthly expiration, which I believe is the 19th or the 30th. So if I roll out to the end of the month, I get 440 on this to lower my cost basis, which isn't bad. It's probably the safer thing for me to do. I can get $3.50, keep the strike price the same. So I'll make an extra 350 bucks on that roll, and I'm going out about 30 days. That's not bad. If I want to increase my strike, I get 250, make another dollar. So I get 350 bucks versus 300. I mean, that's not bad. If I get 350 on this trade, I'm essentially keeping the same break even. This one, I get 250 to another dollar. It's like maybe make an extra 3 cents. But I think lowering the cost basis to me is more important. So let's go. Let's go here. Keep the strike the same. Try to get 350 credit on this one. Okay, hopefully I get at least 345. 346. 345. Now I'm below the mid price. All right, I'm going to cancel that. Try this one again. So roll this. End of September. I'll go to the first week of October. I get 491 on that trade. I'll take this trade. I'm going to try to get 495. So I'm giving back. It's like making 395 bucks. Let me see what canceled. 345, keep the strike the same. Yeah, so if I can make an extra 390. All right, let's try 495 on this trade. 495 got filled. Okay, so that's a new roll. Rolled to 10-3 expiration, 535. Sell call for 495 credit. So that puts my break even down on the QQQ. We got 520.70 minus. So break even is now 515.75. So if it gets called away at 535, I make 1925 on the shares. That's about 2,000 bucks. Okay, so that one should take care of that roll on the Qs. Any other? This will be group covered call. That should handle all of my expirations on the Qs. Collar trade, fine. November, hedging, that's out a ways. Yep. Ratio spread, yep. Okay, those are good. All right, so the Qs are taken care of. Handle that one. SPX, those are out to November. Why do I have one-day expirations in here? Let me find it. Oh, it's the same one for tomorrow. It's the 1 day. There's my basically my free bull call spread. And they're all bull call spread. So I'll manage those tomorrow. If we get a push up into like 65, 20, or 30, I'll make some more profit. Micro strategy. I'm gonna do some rolls here. So I have a 310, 310, 310 covered call. I'm gonna roll those out. We're trading at 338 right now. I'm just gonna roll these and see if I can go out maybe to September, maybe the end of September, see what I can get for a credit. So this trade would be a roll. I can keep the strike the same, go out a week, get an extra 255. That's pretty good, actually. Let's go 2.50. See if this fills. Maybe it does. 250, not bad. So MSTR. Okay, so I own shares of MSTR at 243.21, and I just lowered it to another strike. So I'm going to roll this out, keep the strikes the exact same. Rolled to 9.5 expiration, and keep the 310 covered call for 2.50 credit. And that brings my break even down. So 243.21 minus 250 is 240.71. 240.71. So if I get called away at 310, I'm making $7,000, and I have this on a few accounts. So that one's rolled. Let's roll this one out for the 310 for the next week. Try to get 250 on this one as well. Fill the 250. This one, roll. So this 310, quick roll. Can I get 275 maybe? Maybe this is like super generous. Nope. 265. Nope. Let's try the 250. 255. 255. I'll keep the strikes the same so I know the better break even. 240.71. All right. So that's rolled. So roll to the 9.5, 310, 250 credit. And that should be, now I have the September expirations and October expirations. And that's it for right now. Okay, so that handles MSTR. IWM, I've got some shares here as well. August 29th, 202. This one, I don't mind rolling out a little bit farther and trying to raise the strike. I want to raise the my break even is like 190 on the shares that I have. So I'm going to try to go out far enough and raise the strike up a couple of dollars. Let me see if I can raise this one. So these are all August 29th expirations, and I'm going to try to roll these out. And then we got some waterfall trades in there too. So let's see. This is going to take a second here on IWM, but that won't be a bad trade. So let me go. How far out can I go? Let's find a good roll on this one. So if I roll this out to the end of September, the first part of October, so I can keep the strike the same. I've got a 200. Keep the 202. Let me go up to 203. Nope. I go out further. Let's go to the October 17th. So if I roll the August 29th out to the... All right, so I can get another dollar out of this one by going out to October. That's another $1.14. This is an extra $1.19. Oh, that's so minor. Or I go out to November. I'm going to keep it here in October, and let's keep the strike the same. I'd rather lower my cost basis. So I'm going to lower my cost basis by another $1.15 or so, hopefully. Try $1.15. Okay, $1.12 maybe. Hopefully $1.10. Oh my gosh. Come on, IWM. Shouldn't be less than $1 on that roll. I'm keeping the strike the same. I'm going out about 45 days. All right, $1.07. IWM rolled to 10.17. Keep the strike the same at 202 for $1.07. All right, so that's IWM. This is a campaign trade. MicroStrategy, IWM campaign. We've got the 192. All right, so let's track this one. Rolled to 10.17 expiration, 202 sell call for $1.07 credit. So that moves me from a 192, 192.09 down to 191.02. All right, let's see if I can get all these rolled. So roll this to October 17th. Keep it at the 220 or 202. $7 filled. This one here, roll it out to October, down to the 202. $7 filled. All right, I've got to take care of this on a few accounts. Out to October and to the 202. $8. Out to October. Keep the strike at 202. $8. $7 filled. Okay, a few more accounts. Out to October. It's just a lot of repeat stuff here. Just going through each account. It's all good. $7 filled. I mean, so when this is all said and done, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's, I mean, at $7, 10 accounts on a total of about 1,400 shares. I mean, I'm making an extra $1,500 on those rolls. So it's just like some income. I go out, 30 to 40 days and get the extra income. It's better than nothing. It's better than just letting the shares get called away and not making money on it when I'm in the money. I can just keep rolling and generate, even if it's like $100 every 30 days, it's going to add up. Okay. All right, let's keep going. So we've got this one to roll out to October. Keep the strike the same. I'd like to roll the strike up if I could, but that's proven to be a little bit more difficult. So I'm just going to keep the strike the same. I also want to be able to chip away at the cost, so I can take at least $1 off my cost, which will increase my profit. Okay, it filled at $9. That's not bad. And then two more contracts to roll. So I'll add up the total shares here in just a minute. I think I've got at least 1,400 shares. Filled at $7. Then my last one is this account. October 17th. $8. Filled at $1.08. Okay. So now that gives me share wise 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So I was right. 1,400 shares. So $7, 1,400 shares. I mean, just that extra time in the trade for another like 40 days, it's $1,500 of income. So it adds up. It's just little by little. And if I could do that every month, I mean, if I could generate an extra $1,500 a month, it's another $18,000 in income on my portfolio. That's not bad. That's not bad. So, all right, that's IWM. What else? Qs. I should be good on that covered call, that collar trade. This is in the money now. I'm not really worried about the put side at this time. Everything else is good expiration, so I'll let that one go. SPX, those are trades for tomorrow. SPY, I've got to do a roll here. I've got a 586 and a 595. I'm just going to roll this one. These are in the money far enough that I think I can get a pretty good count here. So I'm going to go 586 This is, yeah, break even is 569. So I'm going to roll this one. I'm going to try to roll this one to like end of September. See if I get a nice chunk. This should be like worth maybe $4 or $5. So if I roll this to the end of September, or maybe the first week of October, if I keep the strike the same, 585, I'm making $300. Move it up so I get an extra couple $100 on this trade. 781, but I'm lowering by 6. I get $1.81 there. I get 295 here. It's $1. I get $1.90. Let me go out one less week. Keep the strike the same. This is fine. I go out to the end of September. I get $1.86. Let me try to get $1.90. $1.91. Okay, so that's not too bad. Rolled to 9:30 expiration. 586 sell call for $1.91 credit. That new break even. So that's 569.44 minus $1.91, 567. Oops, 567. 567.53. So that's my new break even. I've got one other SPY call here. This one is at 595. Let's see, 595 should be 336. Okay. This is actually part of my waterfall income this is my waterfall income trade that I repaired from a December assignment into a winter. My break even's all the way down to 549, and my cover call is 595. I'm just going to roll this again and see if I can decrease my cost and add more profit. So let's roll this one out to the end of September. Okay, I can keep the strike the same and get another $2. Let's see if I get 215 for this one. Maybe 210 for this one. Filled at 210. That's a pretty good trade. Okay, so I'll give you the numbers on that trade in just a moment. This is rolled to 9:30 expiration. 595 sell call for 2.10 credit. And that break even is going to go from 549, 549.44 minus another $2.10, 547.34. So 547.34 is my break even. If it gets called away, it's at 595. Okay, so that's $4,800 on that repair. The trade was down $300 and it's now worth $4,700. Not bad. Okay, that one should be handled now. I think all of my expirations are done. Those are rolled out here. Those are covered calls. And we have some Octobers, Novembers, Januaries, Junes, waterfall, this collar trade here. This one I rolled out. The break even's at 616. I might want to roll this one a little bit. So if I roll this entire collar, let's see. Can I roll this entire collar to, let's take this one out. Let's go October 3rd, I guess. Darn it. It's going to be a pain in the butt. If I roll out the call to October 3rd, I can get another $1.40 out of this one. I want to see if I can add, so $1.40 on the call. Let me see if I can add this side to it. So if I roll this out, oops, get out of here, dude. I just want to roll the put. Roll this to October. So it's going to cost me a little bit. So maybe I can roll this one, and I need to cover a debit of about $3. So I'm going to write that down. So I need to cover a debit of $3. And how far out do I have to roll my covered call? Let's do each one individually. So the 622, if I want to roll this one out, keep the strike the same. 622, roll. How far out do I go? Keep the strike at 622. So I can go out to October 17th and cover it. But I'm only going to make about 77 cents in that trade. If I go out a little bit farther, that one's not bad. I can get like $4 of income on that trade. That's not too bad. I think I'm going to do that. Okay. So I need to roll. Geez, this is kind of complicated. So if I go call to October 31st and the put to October 3rd, then that should give me a net credit of about $3.30, which my point of that trade is I need to lower my cost basis and still have some downside protection. Okay, so let's see if I can do that. If I can get this one out, 622 out to October 31st for 625. See if I get 630 on this one. 630 got filled. Okay, now on the put side, I want to roll this put out a little bit farther to cover some potential drama through September. So let me roll out this put to October or the end of September. So it's going to cost me $3, and I just pulled in $6.30. So that still gives me a $3.30 net. This would be okay if I take off a week. I'll go October. Let's see what happens. So I'll go $3 debit on that trade. See if this will still fill. I think I put a take profit in on that put. Give me a second. This is 854. Okay, so I need to cancel that. $3. Okay, so what a mess. Not really, it's just math, but now I get to do the math. All right, so now new collar. I have a sell call out to October 31st. Sell call, which is at 622. $622 sell call. And I have a 10-3 expiration, 620 buy put. Net credit is $3.30. That break even from 616.91 is 613.61. Okay, so that debit, I need to check the debit on this one now. So that new collar trade is, this is my new collar. This is staggered. I need to watch this debit. So that collar trade here, the 620 is a 303 debit. I just want to keep tabs on that because I want to lower my cost basis more. I want to see that go up in profit if I can. So the buy put is now for a 3.03 debit. So if price drops, I mean, we're trading at 649. If we drop down to like 600, I mean, that's a $49 move. This could pay, I don't know, $10, $15, $20, allow me to take some extra profit on that put side. So I'm trying to have some downside protection while also still getting the shares called away. So it's a little on the messy side because they're staggered out, but I have downside protection and I still pulled in a net credit. Okay. All right. Next up, let's see what else we have here. I think for my expirations, I might be good. Close to it. I can do this again tomorrow. We got 6 minutes left. So NVIDIA, I've got to roll. UNG, I've got to roll. Walmart, I've got to roll. JD, I've got to roll. This should be pretty easy to roll. These 130s I can roll. So if I keep the strike the same, go out to the end of October. Really? I'm only getting 40 cents to keep the strike price the same? You got to be flipping kidding me, dude. September 5th. Keep the strike the same. I get 28. That's a debit? What? This broker wants to charge me to roll out for an extra week? That doesn't make any sense. That's nuts, man. Now I go to September 19th. I get 45 cents to keep it the same. That one's okay. So I'll just do that. I'll roll it out to the 19th, get about 40 cents. Filled at 40 cents. So we'll go 130. Okay, Tesla, Intel, Walmart I'll do later, UNG, NVIDIA. Here we go. Okay. So break even's 119.29. Rolled to 919 expiration. 130 sell call for 40 cents credit. That should be 119.29 minus 40, 118.89. All right. So NVIDIA. Roll to 919, 130, 40 cents credit. Try to take care of these. We're trading at 65.05 SPX. Try to roll this bad boy really quickly here before the close. Roll it out to September 19th. And it got filled for 40 cents. Try the same thing. Filled. Quick roll to the 19th for 40 cents. Filled. And roll here to the 19th. Oh, 45 cents. Yes, no, maybe so. Doesn't look like it. I'll just take the 40 and be good. Filled at 40. Okay. Took care of that one. Okay. That handles NVIDIA. So next up on DTEs, I did the Qs, I did the SPY. I've got NVD. I need to do UNG. I need to write this down in big fat letters tomorrow. So UNG, WMT, JD. That should be it. If I can take care of those rolls tomorrow, then I'm good. And then I'll come back and get some of these other ones in the next few weeks. All right. Real quick on waterfall income. Check on that profit trade right here. This is now up 65 bucks. That's bonus profit. If I want to take it, I can. If this market wants to keep pushing higher with core PCE, maybe it does, maybe it doesn't. I don't mind taking the winner here. So this is trading for, let's go with $1.50 credit, see when we get filled. Oops. Replace $1.90 credit. Let's get it, baby. $1.80 maybe. Okay, so that trade is closed out for $1.80. If you want to close out the trade, here's how the math works on that waterfall. So I pulled in 265, closed it out for $1.30. So I made 135 on the credit spread, and then I just made 85 cents on the debit spread. So I've got a total profit. Our max profit originally on the trade was $1.60. I just closed out that trade for $220. So that is waterfall closed out profit for $2.20 and closed bull put for $1.30 debit, closed bull call for $1.80 credit. So net on the trade, $220. We'll take the winner, and we still have a free hedge going into tomorrow for some of these other accounts. But all in all, that's pretty good. Close today, 65.03. All-time highs hit again. Qs are just off the highs. 3.36% on the S&P, 0.64 on the NASDAQ. Dow is flat, 0.1516. Russell probably had a wild day on the Russell. Let's check the intraday volatility on the Russell. I feel like we were all over the place. Russell, yeah, what a messy day that was. So Russell started out whoops, let the intraday price action. Russell opened up, gapped higher, fell about 0.7%, fought its way back to get positive on the day, finished about 0.15 in the green. So we had all indexes green today. S&P notched a new all-time high. NASDAQ did not. Russell still making the comeback. Dow is not that far away. We're trying to inch towards those all-time highs. I'll go back to this screenshot that I posted for today's session, September reality check. I don't think we can go much further without having at least a pullback to a 50-day moving average. And that goes for a lot of our major indexes. SPX, 50-day moving average is right here. It's now over 3% away. So that's a 3.17% correction. I think we're going to hit it by September. Okay. Can we go higher first? Yes, we can go higher first, but I think we're going to find it in September. The Qs, same thing. This one's not as far away because we're not at all-time highs, but could the Qs melt up to highs and then we fall? Sure. But either way, it's a 3.2% correction to hit it right now. The Dow, we did poke back here in August. This would have been August 1st. We were down in that July 31st to August 1st dip. The Dow was down pretty decently. That was a 50-day moving average test. But if we come back and find it again, then the Dow would be down about 2.9%. The Russell, this one's moved way farther away because it's been just a crazy outperformance for the month of August. If we pull back to the 50-day, we're talking about a 5.7% correction on the Russell. So it's a bit more volatile, but I still like the Russell for dips. I think as long as we don't breach like the 210 or 205 zone, I think the Russell is just more volatile, but we are looking to buy the dips and get to all-time highs. So anyway, that'll do it for today's final hour session. I appreciate everyone being here. Thanks for watching. Let's come back and do it again tomorrow. Same time, same place for daily profit plan. We are 8 for 8 for the week. We've closed out like 17, 18 winning trades. I'll just do a quick summary. So far for the week, we have, change this to black. So pretty active week in trading, pretty good week overall. Daily profit play, we are 8 for 8 winners. We go to waterfall income. We closed out a winner. That's 87. That's win number 87th. at 93% wins. We are closed out for probably over 400 to 500 trades in this service. 90.6% win rate. We took a Project Options Edge. This was a great week for Project Options Edge. I closed out 17 winners. On my, was it Newsbreakers? No, I know we closed out Pinch Point. Pinch Point, we had a winner. It was Nike. We are now 25 winners. So 25 winners, or we're at 83%. Win rate. Project Options Edge, I think we've only taken 2 losses in the entire service. I want to say we've got well over 90% of that as well, but I'll verify that tomorrow. And then we took a bunch of new trades. So these are all winners for the week. Then we have new trades. I think I've got another 7 or 8 trades this week. So Pinch Point, we had a 3-day masterclass workshop. And we took another, 7, 8, or 9 new trades. So a pretty active week in Pinch Point. Active always is daily profit play, waterfall income, keep grinding. I'm doing a masterclass tomorrow. So I have a 1-day workshop masterclass for waterfall income. It's Friday at 1:30 p.m. So if you'd like to hear more about that, you want to join me, there's a chance to join me tomorrow morning for the daily profit plan. Everybody can join me in the mornings at 9 a.m. But if you'd like to join me for that workshop, that's going to be in the afternoon, 1:30 p.m. on Friday. So all in all, not a bad week. We'll kick off tomorrow's daily profit plan at 9 a.m. It's going to be the end of the month. Let's see if there's any funny business. Core CPI comes out tomorrow morning. Bloomberg Economic Calendar, this is what we're looking for. Market's looking at a forecast of 2.9. Previous was 2.8. That's core PCE year over year. Is it hotter? Does the market care? Maybe, maybe not. We'll find out tomorrow morning. So, all right. Appreciate you being here. Have a good day. I'll see you tomorrow. Thanks. Bye.